Hello everybody, it's Fung here. So today we'll be talking about exchange traded funds, also known as ETFs. And again, the information here is sourced from the book The Truth About Money by Rick Edelman. Now before we get started, I recommend that you guys watch the video on mutual funds because there are tons of similarities between ETFs and mutual funds. So getting started, what are ETFs? Well, they're kind of like mutual funds, right? They're that basket or bucket of securities, right? That can either have stocks, bonds, or whatever in them, and that they can invest in any segment of the global financial marketplace. So you can do that through ETFs or through mutual funds. And the key difference between the two of them is that ETFs are traded on the stock exchange. So for mutual funds, you get your share, right? And you sell it to the investment company that you got it from for cash, right? That's how you sell it. But for ETFs, you sell your ETF through the stock exchange to another investor. That's how you liquidate your ETF. So those are the key difference here. So because of this, ETFs, the price of it varies like a stock because it's sold on the stock exchange, while for a mutual fund, it's priced once per day. So now we'll talk about the differences and the pros of ETFs over mutual funds. The first advantage is that ETFs are cheap. Mutual funds require staffing, and this ends up as a bunch of fees that you have to pay. So that means ETFs have generally cheaper fees. The second advantage is that ETFs are tax efficient. So mutual funds, they have constant buying and selling of the securities because of management, right? And this is known as annual turnover. This causes capital gains to realize. So if you remember from our stock lesson, your stock can grow, but tax is not going to happen until you sell it, right? Until you realize those capital gains. So because they're constantly buying and selling, they're triggering a bunch of capital gains tax, right? So then the investors from the mutual funds are going to have to pay those taxes. But for ETFs, this is different. They have less turnover, and in part of this is because of the in-kind redemption that they go through. With in-kind redemption, you can sell the underlying security not for cash, but for shares instead. So this doesn't trigger that tax event, right? That capital gains tax, because that only happens when you liquidate it for cash. But in this case, they're just getting shares. So it's kind of like a loophole, right? So ETFs are more tax efficient. The third advantage is that ETFs disclose holdings daily. And because of this, you're always going to know what you own, right? You can easily look up online every day what your ETF holds. But for mutual funds, this holdings it's only revealed twice per year, which is way less, right, than the daily. The fourth advantage is that ETFs are priced in real time, right? The prices are quoted in real time just like stocks. And this is unlike mutual funds because mutual funds are priced once per day after market closure. So if you were to buy and sell a mutual fund, the price that you bought it or sold it at is going to be revealed until the next day because of that big delay. The fifth advantage of ETFs are that they are highly specialized, right? They're capable of buying every security under a certain definition, right? So if, for example, if we have the definition of mid-cap growth stocks, the ETF is going to buy all of those, right? It can buy all of those. So tracking an ETF is significantly easier than tracking the whole market or sector. And this is unlike mutual funds because mutual funds have managers who, pick and choose these things that they consider as mid-cap growth, right? So ETFs just cover more ground essentially. So recapping everything that we learned, well, ETFs are similar to mutual funds in that you can invest in any segment of the global financial marketplace through them, right? They're traded on the stock exchange, that's their key difference here, and that there's several advantages over mutual funds with ETFs, right? ETFs are cheaper, they're more tax efficient, they disclose their daily holdings or their holdings daily, and they're priced in real time. And lastly, they are typically highly specialized. So that's it for the video. Thank you guys for watching. Like, subscribe, do what you will. You guys are not obligated to do so. And yeah, that's it for the video. Peace.